Mortgage rates in the U.S. are about to drop, and here's what you need to know.
Economists with the National Association of Realtors predict interest rates will drop to 6% next year, not as low as we saw during the pandemic, but about a full percentage point below where rates are right now.
Today, we'll delve into a critical question on the minds of many. When can we expect some relief from the relentless upward trajectory of mortgage rates? Join me as we explore the latest forecasts and gain insights into the nuanced dynamics shaping the real estate landscape. Relief on the horizon. If you've been grappling with the impact of recent rate hikes, there might be a glimmer of hope on the horizon. The experts at Realtor.com have offered a cautiously optimistic outlook, suggesting that relief may be in sight, potentially as early as the approaching spring season. According to their projections, economists anticipate a gradual decrease in mortgage rates, with estimates hovering below 7% by April 2024. This indeed is a modest reprieve. The yearly forecast anticipates an average 30-year fixed mortgage rate of around 6.8%, potentially dropping to 6.5% by December 2024. While this is an improvement, it's crucial to note that we are not reverting to the historically lower rates seen before 2020. Tempered expectations. The lead economist at Realtor.com emphasizes a cautious optimism, reminding us that the pre-pandemic years boasted unusually low rates, which may not be fully achievable in the coming years. With inflation maintaining a level higher than previous decades, the best-case scenario, in her view, is a range between 6 and 7% over the next few years. It's a measured improvement compared to recent spikes, but falls short of the ultra-low rates of the past. Economic factors. Shifting our focus to the factors driving this anticipated shift, a pivotal player is the broader economic slowdown. Indicators across various sectors suggest a looming deceleration, notably in the job market. Rising unemployment claims and announcements of layoffs and hiring freezes by major corporations signal the beginning of this economic adjustment. Inflation and mortgage rates. As the job market cools, inflation is expected to follow suit. Recent signs indicate a stabilization in consumer prices, partly attributed to declining gas prices. This ebb in inflation provides the Federal Reserve with an opportunity to ease off on the aggressive rate hikes, a move that is intricately linked to the mortgage rate landscape. Gradual descent. Looking ahead to 2024, as the Federal Reserve adopts a more measured approach, longer-term mortgage rates are anticipated to respond in kind, gradually descending. We have already witnessed glimpses of this scenario, as rates dipped below 7% last month, following a peak above 8% during the summer. It's a testament to the interplay of market forces. Home prices. Now let's pivot to the aspect of home prices. Realtor.com predicts a modest retreat of approximately 2% across the nation in 2024. The tumultuous year we've experienced so far, marked by fluctuating prices, is expected to stabilize in the final months of 2023. However, come spring 2024, the forecast foresees annual price drops gaining momentum, potentially extending through the end of the following year. Factors impacting prices. What's fueling this decline? Firstly, with mortgage rates projected to remain elevated, the pool of prospective buyers able to afford monthly payments is expected to shrink. Reduced competition could lead to fewer bidding wars, providing buyers with more negotiating power. A classic manifestation of supply and demand dynamics. Inventory challenges. Secondly, inventory challenges are predicted to exacerbate before showing signs of improvement. Existing home listings are anticipated to experience a substantial 14% decline in 2024 compared to 2023. The silver lining here is that a constrained inventory might give remaining buyers an advantageous position. Seller behavior. Lastly, sellers facing difficulties may resort to price reductions to attract buyers, especially if higher mortgage rates dampen demand in the coming year. Payment projections. Considering these dynamics, the forecast projects a potential decrease of approximately $40 in typical monthly house payments in 2024, settling at $2,200. While this is a welcome respite amidst the volatility of the current market, it's important to acknowledge that it still exceeds historical norms. Regional trends. Before we conclude, let's delve into a few regional trends. Realtor.com identifies several Midwestern and Northeastern metros poised for a home price surge in 2024, projecting double-digit gains even as national numbers decline. Keep a close eye on these areas. Conversely, formerly high-demand areas like Austin, Phoenix, and Las Vegas, which attracted significant attention in recent years, might witness a cooling off in 2024. Projections suggest potential double-digit value drops in cities that led the ascent in previous years. As the saying goes, what goes up must come down. To sum it up, the overall trend indicates a potential easing of mortgage rates, offering a glimpse of relief on the horizon. However, home prices remain notably higher than historical benchmarks. I'm eager to hear your thoughts. Do you believe these lower rates will stimulate more buyers to enter the market? Or are we destined to navigate the challenges of a 7% mortgage landscape for the foreseeable future? Share your insights and predictions in the comments below.